In today's video, I'm going to go over a little bit of my work in the crude oil. And if you've been watching some of my stuff, either in the updates or on Twitter, you know that there was time and price at the low that was made in June, and that one of the other recent pullbacks that we looked at, where we had a zigzag or two-step pattern into symmetry, we were looking for a 1272 target off of that swing, which looks like this, side of this low, okay, which we met yesterday. And then there was also another target off of the recent swing, which we also met yesterday. So we've made minimum targets now off of this last setup and this last setup, and we've also seen a really nice rally off of the June 21st low. So what is the next decision? This is what we have to be concerned about, because if you look at a continuous chart in crude on the weekly, you can see that on that time frame chart, you're actually looking at a pattern of lower lows and lower highs, which means we have to watch this area for a possible failure. We may not get the failure, but you have to anticipate that possibility because of the pattern that you're looking at on the higher time frame. Because after all, as far as trade setups are concerned, it's all about the time frame that you're looking at. And right now, we've just had a rally from the recent low that's just very similar to a couple of these prior rally swings. So this is the area that we have to watch to fail or not to fail. Now, this is the continuous contract, which I don't trust totally because of the rollovers. It can kind of muck up my price work. But as far as the September contract in crude, I'll show you where I have resistance coming in that you can watch for possible failure. Now, the first zone comes in at this 49.08 to 31, which includes target number 2, or the 1618 extension, and a couple of symmetrical projections. Then we have an area that includes a 618 retracement and another larger symmetrical projection, plus an extension of another swing and a couple of retracements at 49.80 to 50.32. So these are two areas that I'm going to watch for possible failure, okay? If you've been trading this on the long side, it's really a good time to ratchet up stops. Not to say that we won't get through these areas, but just in case we don't, okay? So that's my next immediate decision in crude. You want to take it from one decision to the next. Now let's say, for example, if we don't see any reversal indications around this resistance, then what do you have to think? Well, then in the bigger picture, you have to consider that this could be an even more important low, and that you could get at least a deeper upside correction rather than a failure instead. So let's watch these zones, see if they trigger short or not, and then trade accordingly.